All right, let's decode Meta's latest quarterly report. We're going to peel back the layers of a financial statement that honestly seems to tell two completely different stories. Our goal? To figure out what's really going on behind all those billions. Okay, let's jump right in.
So right off the bat, Meta's Q3 report is a total paradox. I mean, one key number suggests the business is absolutely on fire, while another makes it look like it's collapsing in spectacular fashion. How can both of those things possibly be true? And the contradiction here is, well, it's just wild. On one hand, you've got revenue, which is up an incredible 26%, soaring past $51 billion for the quarter. I mean, that's a booming business, right? But then you look at the other side, net income, the actual profit, and it has absolutely cratered by over 80%, plunging from almost $16 billion down to just $2.7 billion.
So, yeah, what on earth happened? That is the central mystery here. How does a company make an extra $10 billion in sales, but somehow end up with $13 billion less in profit? Let's figure it out.
The answer, it turns out, isn't buried in some complex business disaster. Nope, it's sitting right there in plain sight, on a single line in the income statement. And it all comes down to taxes.
The culprit is this massive number, $15.93 billion. This is a one-time tax charge that pretty much single-handedly explains the entire profit collapse. But here's the twist. This isn't a check they just wrote to the IRS. It's actually an accounting charge triggered by a brand new law.
That new law, the One Big Beautiful Bill Act, forced Meta to completely change how it values certain tax benefits it was expecting to get down the road. Think of it like this. Imagine you have a gift card you thought was worth $100, but then a new store policy suddenly makes it worth only $20. You haven't actually lost any cash from your wallet, but on paper, you have to record an $80 loss. That is exactly what happened here. It's a huge hit to the reported profit for this quarter, but it doesn't really change the underlying cash-generating power of the business one bit.
And this chart just lays it all out perfectly. The bar on the left, that's the reported profit of $2.7 billion. But if we add back that one-time non-cash tax charge, you get the bar on the right. Meta's adjusted profit was actually over $18.6 billion. So, far from collapsing, the company's core profitability was stronger than ever. Mystery solved.
Okay, so now that we've cleared away all that headline noise, we can dig into the real state of the company. What does this report really tell us about Meta's core business and its absolutely massive bets on the future?
You know, to really get Meta, you have to see it as two completely different businesses living under one corporate roof.
This chart really says it all. That giant blue slice, over 99% of all revenue, comes from the family of apps. You know, Facebook, Instagram, and WhatsApp. Their advertising business is the company, financially speaking. And that tiny little sliver, less than 1%, that's Reality Labs, the division that's building the Metaverse.
And hey, if you thought the revenue chart was lopsided, the profit chart is just staggering. In one single quarter, the family of apps generated $25 billion in operating income. At the exact same time, Reality Labs lost over $4.4 billion. One division is basically a money printing machine, and the other is a money furnace.
And this is the point you really have to get. This social media business isn't just another part of Meta. It is the powerhouse. It's the financial engine that single-handedly earns the company the permission to make this monumental bet on the future. So, let's take a closer look at that bet. Because the scale of the spending over at Reality Labs is, well, it's almost hard to wrap your head around.
Just let this number sink in for a second. That's the loss for just 90 days. That works out to almost $50 million burned every single day, 7 days a week. So where is all that cash actually going?
Well, it's going everywhere. R&D now eats up 30 cents of every single dollar of revenue the company brings in. They're spending unbelievable amounts on physical stuff, over $48 billion in just 9 months on things like new servers, massive data centers, and developing the next generation of headsets. This isn't just about building an app. This is the price tag for trying to build the next computing platform from the ground up, a vision Mark Zuckerberg is all in on.
But here's the thing. While one part of the company is building for a very uncertain future, the part that's paying all the bills is fighting existential battles right here, right now. The entire Meta empire is navigating a massive legal and regulatory storm. And the attacks are coming from three main directions, all at once, from regulators and lawsuits all over the globe. They are competition, privacy, and the safety of its youngest users.
First up, competition. And this is the big one. The U.S. government's landmark antitrust case against Meta has already gone to trial. The Federal Trade Commission is literally asking a judge to break up the company by forcing it to sell off Instagram and WhatsApp. A decision could come at any time, and if Meta loses, well, the very family of apps engine we've been talking about would be completely dismantled.
Next up is privacy, and the battleground here is mainly in Europe. Regulators there are challenging Meta's entire business model. They're arguing that forcing users to either pay for privacy or accept personalized ads is flat out illegal. And this isn't just about fines, which are already in the billions. It's a fundamental threat to whether its core ad business can even operate in Europe the way it does now.
And finally, there's youth safety. A whole wave of lawsuits from dozens of U.S. states now claim that Facebook and Instagram are addictive and harmful to teens. This threat strikes right at the heart of the user engagement model that makes the platform so valuable to advertisers in the first place.
So when you put it all together, this is the real picture of Meta today. You have a core business that is more profitable and more powerful than ever. All that power is being used to fund a monumental, incredibly expensive long-term bet on the Metaverse. And it's doing all of this while fighting off a storm of legal threats, any one of which could cripple that core business.
So this leaves us with the final crucial question. Meta's financial engine is, without a doubt, stronger than it has ever been. But with billions being burned on a future that may never even arrive, and an army of regulators trying to dismantle the engine itself, can it outrun the storm? This report raises that exact question, but only time is going to give us the answer.